Technology stocks locally and on Wall Street reign supreme in 2023. Consumers gain just a little bit of confidence, but business turns gloomy, and Qantas gears up for a very busy Christmas. Welcome to Fear and Greed Business News, Australia's best business podcast. It is Wednesday, the 13th of December 2023. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Sean, after the show today, you are speaking with Malia Fauna, who is the Oceania FinTech leader at EY.
Yes, so EY have put out their annual FinTech survey. It tells of a maturing FinTech sector. There's not actually that many startups around anymore, certainly not over the last 12 months or so. A lot of them need to look overseas for capital. We talk about whether that's a good or a bad thing, and also about the future of the sector in Australia. Really fascinating chat with Malia.
Yeah, it is a good one. It is coming up after the show. The main story this morning, Sean, a surge in tech stocks yesterday has almost ensured that the sector will be the top performer for 2023, with companies like Xero and REA and WiseTech Global defying higher interest rates and recording some of the best returns all year.
Yes, in fact, the trend continued yesterday with Xero surging 4%, meaning it's up more than 50% this year. REA was up 2.6% yesterday, taking its 12-month rally to about 37%. And WiseTech Global, which is up 30% over the past year, jumped about 2.7% yesterday. The information technology sub-index of the S&P ASX 200 is up nearly 25% so far this year, almost twice as much as the next best sector, which was consumer discretionary, which is actually another interest rate sensitive group. Tech stocks did more than 3 times better than the next sub-index, the telcos. Now, tech stocks are known as growth companies with long-term strength in earnings, but they shouldn't do well, and I say shouldn't, when interest rates are rising, because forecast future cash flows are affected by higher interest rates. But even though there have been 5 25 basis point rate hikes in 2023, the fact that interest rates are perceived to be peaking has helped the sector, along with a lot of excitement over artificial intelligence. Other tech stocks locally to have run hard this year include NextDC, up more than 40%, Altium, which is up 27%, and Life360, which is up 25%.
Sean, how much of this is related to what's happening on Wall Street?
Plenty, especially chipmaker NVIDIA. Its share price is up 225% this year, and Meta Platforms is 160% higher. But there's a bunch of big improvements in tech stocks on Wall Street. Tesla's up 121%, Amazon 70%, Apple, Alphabet, Microsoft, they're all up around 50%. It's a big reason why Wall Street has done so well this year. In fact, it's a big reason why Wall Street has done so well over the last decade or so. In more recent times, the advent of AI, artificial intelligence, and the peak of the rate cycle has supported those big 7 Wall Street tech stocks. The local market follows the US, and while the ride hasn't been quite as wild here, US tech has certainly provided the direction. I think 12 months ago, as we're heading into Christmas, not many people thought the tech stocks would be the best performers in 2023. Not only are they the best stocks, they are streets in front of any other sector.
Sean, is the tech sector more aligned with what happens in the US than other sectors?
It's a hard question to answer. Commodities are a very global industry, so a lot of what's happening in commodity prices is very global. Then there are other areas like consumer staples. Woolies don't really compete with Tesco's in the UK, for example. So it's a broad spectrum. Technology is probably somewhere in the middle, probably more towards, yes, it follows what's happening overseas, but it very much depends on whether pricing is set globally or not.
All right. Well, we've talked a fair bit about tech stocks. How did local markets perform more broadly yesterday?
The S&P ASX 200 closed up 0.5% to 7,235 points, with the market at close to a 3-month high. Now, as that main story told us, it was all about the tech stocks yesterday, but there are a few other sectors that did pretty well. Consumer staples, real estate investment trusts, healthcare and telcos. They are all on the plus side of the ledger. Among the large caps and away from the tech stocks, Cochlear jumped more than 2%, Woolies rose by about 1.8%, Brambles and Fortescue Metals were up more than 1.5%, and Aristocrat rose more than 1%. On the other side of the ledger, Rio Tinto and QBE both went backwards. Telstra was higher, so too Goodman Group and all the banks.
And international markets?
There's plenty of data and commentary coming out of the US this week, none more important than inflation figures later tonight in the US Federal Reserve meeting at the end of the week. Wall Street's waiting for the information, yet still managed to hit its highest level for the year over the past 24 hours. In commodity markets, Brent crude's trading around $77 a barrel, while gold is down to $1,985 an ounce. Iron ore prices are holding up well, and coal prices are at their highest in more than a month. Both those commodities are very important to Australia's economic outlook, part of the reason why the Aussie dollar is buying about 66 US cents.
Okay, there's a bit going on. We'll be back in a moment with the rest of the day's business news. Sean, China has started lifting its trade ban on Australian red meat imports, leaving lobster and some beef as the last products suffering from Beijing's coercive trade sanctions.
Yeah, sure have. Trade Minister Don Farrell yesterday confirmed that China's customs agency had lifted the trade bans, which apply to 3 of Australia's largest abattoirs. Sanctions, however, still remain on another 7 or 8 smaller abattoirs, as well as the entire lobster export industry. The sanctions were among the $22 billion in trade bans imposed when the China-Australia relationship fell to its low, I would say. That was during the Morrison years. Senator Farrell yesterday welcomed the development but called on China to lift bans on the rest of the red meat industry as well as lobsters.
Now, Sean, I mentioned this next one at the top of the show. Consumer sentiment jumped this month, but it is still very weak, while the latest measure of business conditions and confidence fell.
An easing of interest rate fears helped the consumer gloom, but all up, 2023 has been a bit of a shocker for confidence, according to the Westpac Melbourne Institute Index. As Westpac senior economist Matthew Hassan put it, consumers remain far from upbeat. That's an understatement. While the index ends the year higher than it was, 2023 marks the second worst calendar year on record for sentiment, and records go back to about 1974. By contrast, this year, business has been relatively upbeat, according to the National Australia Bank survey. But business is finishing the year much more pessimistically than they were a few months ago. Business conditions, including trading, profitability and employment, fell during November. Confidence also dropped, with the biggest falls in retail.
Sean, one of the challenges in our increasingly cashless society is the cost of moving notes and coins around the place. And now Reserve Bank Governor Michelle Bullock says the banks and major users of cash should bear some of the cost.
Bullock said there are merits to exploring the cooperative model for cash distribution in Australia. Now, her comments come a week after Armaguard, the dominant player in the cash transport business, called for a cash injection, ironic, to keep operating. Armaguard is making heavy losses, mostly because the percentage of payments in cash has fallen from about 62% in 2010 to about 13% in 2021. Guarantee you it's lower now. Bullock said the Reserve Bank places a high priority on the community continuing to have reasonable access to cash withdrawals and deposit services, often through ATMs, and particularly in regional and remote areas. The governor also said the Reserve Bank is considering whether action against mobile wallet providers such as Apple Pay and Google Pay is warranted under new powers progressing through the federal parliament, but intervention in the buy now, pay later sector is likely to ensure providers allow merchants to add surcharges to the services.
Sean, speaking of moving money around the place, surely the best way to do it, remember those tubes? Did you ever work in like a supermarket or anything kind of when they had excess cash? Stuff it in the tube and then just like, shoop, it's gone.
I know. I never did, but I would have loved to. Did you? Because you were in one of those retail jobs when you were young.
That's right. I was a checkout chap at Bilo, which I think then was later taken over. What are you laughing at? Taken over by Coles. And it was always the best kind of part of the job was kind of you had to kind of put the excess kind of cash, all the 50s and everything into these little pods that kind of sat underneath the desk, but we never got to put them into the tubes. And that to me is just this unfulfilled dream that I need to put something into one of those tubes and just watch it go zoop, zoop. Look, I'm going to put it forward to the Reserve Bank that maybe we should invest in a tube system.
A zoop system.
To move money around the place. Now, speaking of moving around the place, Sean, Qantas and Jetstar are preparing for one of their busiest Christmas holiday travel periods in years, with more than 8.5 million people expected to fly on the carriers throughout December and January on nearly 70,000 flights.
This is more than 500,000 above the same time last year and the most since 2019-20. Qantas says the biggest day of travel is expected to be Friday, December the 15th. That's this Friday, with more than 150,000 customers flying throughout the day. A year ago, Qantas had a disastrous Christmas period, which really turned the public against the airline. There were delays and staff shortages and baggage problems, all sorts of things. Now, to help cope with the surge in people flying and limit disruptions, maintenance has been brought forward on Jetstar and Qantas aircraft, and up to 13 aircraft will be on standby as operational spares. Love the idea that you've got 13 operational spares in the hangar. Qantas also said there was a significant boost to reserve staff who can be called on if there's an unexpected sick leave. Qantas is urging travellers to check in online for domestic flights, arrive at least 1 to 2 hours before the departure of a domestic flight, and 2 to 3 hours for an international flight, and stay within baggage limits for carry-on and check-in bags. They also pleaded with people to be nice to staff, and I definitely agree with that last one.
Yeah, absolutely. The federal government's migration policy, which was unveiled on Monday, and we talked about that at length, Sean, it's received a bit of a lukewarm response, really, with the opposition leading the criticism, warning that the decision to ban foreign tradies from accessing the new fast-track visa systems could put upward pressure on house prices.
Opposition leader Peter Dutton called it the completely wrong decision. As part of its new migration strategy, Labor will create a priority visa pathway for employers to bring in migrants who earn more than $135,000 in an application process that will take just 7 days. But highly paid tradies, machinery operators, drivers and labourers have been excluded. Highly paid tradies would instead need to come through the new core skills visa stream, which will only allow applications if a job is deemed in shortage by the federal government. Visas in this stream will be processed at a slower pace of about 3 weeks. Bricklayers, carpenters, electricians, joiners, painters, plasterers and plumbers are all on the Department of Home Affairs' current skilled occupation list. They probably will shift across to the core skills visa stream, but the opposition isn't so sure.
Sean, Stephen Miles says he will seek nomination as Queensland Premier with Treasurer Cameron Dick as his deputy when the Labor Party caucus meets on Friday.
Miles' bid for the Premier spot follows the shock resignation of Anastasia Palaszczuk as Premier on Sunday after nearly 9 years in the role. Stephen Miles says there will be changes to Queensland Cabinet after the new Premier takes the reins. He confirmed that Cameron Dick would remain Treasurer and he'll also become Deputy Premier should Labor's caucus back Mr Miles's bid for leadership on Friday. The other main contender, Shannon Fentiman, pulled out on Monday. She's been guaranteed her role as Health Minister, though.
Yeah, it's not only politics, though, Sean, where changes at the top are happening right now. There's a few corporate executive moves. Also, former Westpac boss Brian Hartzer will take over data analytics and artificial intelligence player Quantium Health.
Hartzer resigned from Westpac 4 years ago and has been an advisor to Quantium Health since 2020. He's taken on that top job. Incitec Pivot has hired a former BHP coal and copper executive, Moreau Neves de Marais, as its new chief executive as it prepares for a possible sale of its fertilisers business. And Platinum Asset Management has appointed a new CEO, former management consultant Jeff Peters.
All right, turning to international news now, and a draft communique from the COP28 climate summit in Dubai has dropped any pledge to phase out fossil fuels, triggering really a fierce debate now among countries, including Australia, which want the commitment back in.
The draft text that was released by the United Arab Emirates fell well short of many countries' and green groups' hopes. It promises to reduce oil and gas, and there's a bunch of commitments that countries could do something as opposed to will do something. Observers said the wording is trying to win over fossil fuel giant Saudi Arabia. Energy Minister Chris Bowen told a closed-door meeting of ministers that although the draft was a step forward, it was not a step change, and Australia could not support the document as it stood. Bowen was speaking in his role as chairman of the so-called umbrella group of countries at the COP negotiations, which includes among its 11 members the US, Britain, Norway, Canada, New Zealand and Japan. The EU also hit out at the draft text.
And finally, a federal jury in the US has found against Google in a lawsuit brought by Epic, which is the company behind the very popular video game Fortnite, which accused the search giant of suppressing competition in the Android app market to secure billions of dollars in profits from its Play Store.
Yes, it will be very interesting to see what sort of precedent this sets. The verdict was returned just hours after closing arguments in the weeks-long trial in San Francisco. The central issue in the case was whether Google stopped rivals to its Play Store and payment services from gaining traction on Android devices, according to a report in the Financial Times. Epic's lawsuit alleged Google abused its power to charge excessive fees and made an operating profit of about $12 billion on its Play Store in 2021 alone. Epic had sought to use an alternative billing mechanism on the Play Store that avoids Google fees. Now, it wasn't allowed. It sued Google. We're at the point where Epic has won. It now falls to the judge in the case to determine what remedies Google should face.
Okay, up next is the Fear and Greed daily interview. You're speaking today with Malia Fauna, who is the Oceania FinTech leader at EY.
Yes, all about how the fintech sector is going in Australia. EY has just released its annual survey and plenty of surprises in it, Michael.
Yeah, it's a really good conversation, Sean. It is up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. And Sean, you know what today is?
Wednesday, Michael. How do they afford that day?
That's right. And so there is a new episode of How Do They Afford That, our sister podcast, all about kind of making your money work a little bit harder for you. It comes out every week. And look, you'll find it wherever you listen to podcasts. Just search for How Do They Afford That? But I'll put a link in today's show notes as well. Today's topic is a really interesting one, Sean, and it is all about what to do about money when a relationship ends, and which can get kind of very complicated and very, very difficult. But we look at all kinds of aspects of it, from the kind of the home to investment properties to an investment portfolio, and all of these kind of bits and pieces, and the importance of communication and really kind of good legal advice, good financial advice, and just basically the intricacies of all of that kind of situation, and basically how to make sure that the people really aren't kind of losing out as well as you go through that process. So How Do They Afford That? Out every Wednesday, and I'll put a link in the show notes as well. Thank you, Sean.
Thank you, Michael.
It's Wednesday, the 13th of December, 2023. Make sure you're following the podcast, and please join us online on LinkedIn, Instagram, X, and Facebook. I'm Michael Thompson, and that was Fear and Greed Business News. Have a great day.